Crypto right now is not for everybody. There's been a false dichotomy within the crypto space, which is we know everything, we're the best, banks are bad. We don't view the world in that way. Banks being there, they will continue to be there. They will all be in crypto at some point. We will work with whoever wants to work with us to promote the best interests of the human race, regardless of what you call yourself. Crypto and Bitcoin isn't just a cute thing.
Welcome back to the Next Billion podcast, where we're talking to the entrepreneurs, the builders, the people that are doing stuff. And one of those people is with me today. We have Farzam from VALR. So Farzam, this is, I guess, your first journey onto the Next Billion podcast. So welcome.
Thank you so much. Thanks for having me.
Oh, look, it's a pleasure. So we're going to be talking about centralized exchanges and all of the things which essentially exchanges have been the reference point for crypto since forever, basically, certainly since I've been in it. So look, this is one of the pillars of the ecosystem, and we have someone here to talk all about that. So maybe explain a little bit before we get into VALR and what you guys do. What's been your crypto journey thus far? And I know that you've been around for quite a many years in this crazy world, but maybe give us a brief overview.
Sure. So my crypto journey started in about 2012, 2013 when I first heard about Bitcoin and thought it was a total scam. So looked the other way and didn't kind of come into contact with it for another couple of years.
This is most people.
And then I had one of my
common thing.
One of my very good friends was in California, in Silicon Valley, building a crypto startup. A very good friend of mine, also a fellow Baha'i. We can talk about the Baha'i faith at some stage. And I kind of said, listen, Adam, we are trying to make the world a better place. This is a scam. Like, it's beneath you to be working on this stuff. And so he kind of said, Farzam, I think you don't understand. Let me explain a little bit about blockchain technology, Bitcoin. And he did. And I think from that point on, it was 2015-ish, I think somewhere around there, I really just started learning a lot about it. I got off a call with Adam, and my wife had said, Farzam, you entered finance. I was working at an investment bank at the time, to try to make the world a better place. Maybe this is something you ought to look into. And so that was the beginning of the journey, became the blockchain lead at the largest bank in Africa, where I was in 2016 to 2018, and then started VALR in 2018.
Right. So you became a blockchain lead at a bank first. That was the first entry into it. And how was that? Because I know that a lot of banks have dipped their toes in at various stages. So I guess, were you running a particular program there, or were you just sort of like, oh man, I've done this for a few years, I need to go and start my own thing? Or how did that go down?
In 2016, you got to remember, this is like way before, the ramp up in 2017 and late 2017. And I remember having a few conversations with people at the bank saying, hey, have you heard about Bitcoin and blockchain? And the response that came back was, oh, yeah, we're on top of it. And I thought, oh, okay, cool. Wow. People are, only to realize that really people didn't understand what blockchain technology was, nor what Bitcoin was, etc. And so there was a lot of resistance within the bank. Ultimately, once we had something to launch, we actually built an exchange in a bank. And then once we were ready to launch, the appetite wasn't there to launch it. And that's kind of what led myself and a couple of my co-founders to leave the bank to start VALR. But the bank that I was working at was very forward-looking and actually had a great appetite to actually have us as a team, a full-time team. There were about 5 of us as a full-time team there in 2016, 2017. But ultimately, with regulations and people not really fully understanding what crypto was, I think it was just a step too far for a large institution that, to take on the risk of what this new kind of world was at the expense of, giving up maybe potentially a banking license if they didn't do it correctly. So it's still early right now. It was very early then, but it was too frustrating to stay. And so we left.
I can imagine. So I think that's the story that a lot of banks go down, is they build these pilots internally and then they get it to production. And then it's like, okay, well, who's the users? And it goes up the chain. And then they're like, well, we can't exactly go to retail as a bank. So I guess, I don't know what we do with this crypto exchange thing that we built internally, maybe shelve it. And that's been the fate of quite a number of things, right? So I guess moving on from there, you decided to go and start your own thing. So that was, you said, with some of your previous colleagues, or you had to go and look for investors and start shaking hands and all this kind of stuff?
Yes. So we had the core team in place, which is myself and a couple of my colleagues from the bank. We did not have investment. We did not have savings. And so I think that was probably the most nerve-wracking part of it, is to actually build up the courage to actually leave, to face failure, which is the most probable outcome when you're starting a new company, but at least giving it a shot. And that's what we did. We were lucky enough to get an initial investment from, actually, funny enough, the ex-CEO of the bank that we were working at, who was our first initial seed investor, and then also Bittrex, who sadly, obviously, closed down their doors recently, but they were our first major seed investor in 2018.
Amazing. So getting the ball rolling, and you were working at the African bank though, right? So then the exchange, the focus for that was to launch in Africa, or was it to be global? Or I know everyone in crypto is like, hey, we're a global thing. Anyone in the world can use it. But the reality is that you can only talk to so many people, right? And you can't appeal to literally everyone in every language in every country of the world on day one. So what was the go-to-market plan then?
So initially in South Africa, we were based in South Africa at the time. South Africa only had one major exchange that I think had about 95% of the volume. At the time, it was only offering Bitcoin Rand, which is the local currency, South African Rand pair, and the fees were exorbitant. So to give you an idea, the maker fee was 0%, the taker fee was 1%.
Okay.
So 100 basis points, which is the taker fee. And as a result, you would see, not to get too technical, but on the bid-offer spread, you would have these huge walls of bid-offer spreads on the bid and offer, and everybody was just waiting to hopefully be the maker rather than the taker. So we looked at this and we said, A, we've got to get more assets to the local market. B, we've got to get much more competitive fees. And so we introduced a really competitive fee offering. At the time, it was negative 10 basis points as the maker fee. So we would pay our makers 10 basis points, and it was 20 basis points taker fee. It's since compressed since then. So we're at one, we still have a negative maker fee that we pay our market makers, and then we've come down quite significantly on the taker fee. And so we launched with that. And, to my surprise, on our first day, I was hoping to maybe get 1 or 2 Bitcoins worth of volume. We actually hit, I think, 50 Bitcoins of volume that first day.
Amazing.
And then slowly, we kind of ticked up. We're now the largest exchange by volume in South Africa by quite a significant margin. So on any given day, we're probably between 50 to 70% of the entire market in South Africa. But more recently, and we'll get into this, is that we have our sights set on the global scene. And so we've just recently launched perpetuals, spot margin trading. So a lot of the products that we really hope to provide to an international audience, dollar on-ramps, USDT pairings, etc. So we're very excited about this next stage, which I'm sure we'll get into.
So in my remittance days, emerging markets always had a premium, for those types of currencies like Rand and that sort of thing, right? Like we used to buy Bitcoin in Hong Kong and then sell it in, say, Indonesia for like plus 1% premium over the current FX spot, because there's often, hey, the Rand is not exactly the world's best performing currency in the world versus USD. In fact, I'm pretty sure it's gone down against USD since forever. So a lot of people want to get out of the local currency and into something like, whether it's Tether or crypto in some way. Is that what you guys see either back then or now, or has that compressed over time, or do you see that go differently in terms of bull markets, bear markets?
Yeah. So in 2017, the year before we started VALR, I recall seeing the premium in South Africa at 30%, 30%. There was a huge premium. Since then, it's come down quite significantly. But right now, there is a South African premium. It's about 1% to 3%, depending on the supply-demand dynamics. And what's really interesting is that that's 1% to 3% above basically the international dollar rate or the Bitcoin rate. If you take a Bitcoin, you convert it in, say, the the dollar Rand rate into a Rand rate, and then you compare that with exchanges in South Africa. The exchanges in South Africa are about, as I said, 1% to 3% higher. That's predominantly because we have exchange controls, capital controls in South Africa.
Yeah.
And this is a very interesting topic that I think stumps a lot of very, very intelligent, very knowledgeable people, because they said, oh, there's an arbitrage. So as more people come into the market, then that's going to squeeze that arbitrage down to zero. Yes, that's what the textbook says, but the textbook doesn't talk about exchange rates and capital controls where there's a structural regulatory interference with free market forces that should bring arbitrages down to zero. So while there is capital controls in South Africa, we anticipate that arbitrage to still exist, that premium to exist. But again, it changes on day-to-day basis. On the rare occasion, it goes negative if there's a kind of a blip in the markets. But on average, I would say 1% to 3% is the premium.
And that's what I was going to ask is, does it ever actually go back to equilibrium? Because one of the trades that I used to do with the Chinese exchanges back in the day is you'd sell at the premium, then you'd lock in, say, 3% over spot or something like that, something that's awesome and worth your time. But then you'd wait for the markets to sort of establish and reach an equilibrium, same as FX. And then you would buy back in the local currency and then extract it back out. And then you didn't need the local off ramp at the other end. You could just do it entirely remotely. And I guess for a centralized exchange, if there's more people sort of becoming, I guess, sort of market makers or whatever on the exchange in that way, like that's good, right? But is that something that happens? Like the equilibriums sort of do hit every so often, whether it's a week or a month or something like that?
Yeah. So equilibrium is in parity, right? So we generally, you won't see the price in rands equal to the price in, on the international markets converted with the FX rate. And so you see a lot of people that are actually doing the arbitrage, but actually doing the flows like that. And there are, within the capital control framework, you have allowances to allow that to happen. But you have a lot of sophisticated traders that actually analyze what that premium is. And when that premium goes much higher than it should be or much lower than it should be, and they actually trade the variance of the premium itself. So there's a lot of that where you don't actually have to go off international exchanges, but based on historical values, you kind of look at what the expected premium should be, and then go long or short that premium on the exchange itself. There's a lot of strategies to actually take advantage of that.
So I guess what most people will say is with centralized exchanges, like the last 2 years has been an example and a warning to a lot of people. I guess we had Celsius and BlockFi and of course FTX and all of these other things blowing up left, right, and center. So what should people be aware of with exchanges? Do you guys have like auditable reserves or something like that, or something to give that assurance?
Great question. So we've spent a lot of time thinking about this. It's going to be a multifaceted answer. So the first thing is, whenever you put funds on an exchange, regardless of what the exchange is showing you, a proof of reserve or not, you are trusting that exchange.
Mm.
And there is no way, and let me be very, very clear, regardless of whether they have proof of reserves or not, and by the way, we do not yet publish any proof of reserves because of what I'm just about to say, is that there is no way that by looking at a proof of reserves, you can be 100% sure that your funds are on that exchange. Mm. And why do I say that? Because on the one hand, you have the assets, which can be auditable on the crypto side from the blockchain. You can't audit on the fiat side because it's hiding behind a bank login, right? So you can get auditors, et cetera, to do that. But that's on the one side. The other side is what's on your system. What are your liabilities that you have to your customers that nobody has access to except for the exchange? Now, if I'm going to lie to somebody, or if an exchange operator is going to lie to somebody, it's very easy to go and change and jimmy those reports to show exactly what the customer wants to see. So what I say is actually take those reports with a huge bucket of salt, because ultimately, if someone is lying to you, they will lie to you via a published proof of reserve or not, right?
Yeah.
So it's a game of trust. Secondly, what I always say to people is that if you have any doubts, withdraw your funds always. The big test to know whether your funds are available to you, withdraw those funds and see if you actually have them at all times. Thirdly, is exchanges come with risks, right? There's operational risk, there's security risk, there's external risks, there's internal risks. So one of the things that we pride ourselves in is the fact that we have a really, really high bar of integrity and values that drive our culture and our company. But I cannot put hand on heart and assure everybody that your funds are safe at all times, always, because nobody in the exchange space can do that. Because security by definition cannot be 100%. There are always risks. So the point of having an exchange, we have a dedicated cybersecurity team, we have external audits, we have pen tests that come, we have several different companies that we work with, because this is the one thing that's on my mind, last thing that I go to sleep and the first thing when I wake up. But be knowledgeable about the risks that you have in crypto always. It's not possible to have zero risk, whether your funds are on an exchange or whether you hold them yourselves in a software wallet or in a hardware wallet or in any other paper wallet or whatever it may be. So I've tried to do quite a lot of publishing of some things on Twitter and other places about understanding your risks. There's risks when you hold your funds on exchange. There's risks when you don't. So understand it and then act accordingly. There isn't a one size fits all. And so the last thing I'll say on that is that Our integrity and our trustworthiness as VALR is all we have. And so we guard that and we talk about that internally to the nth degree. But ultimately, as an external observer, you need to do your research on us. You need to always understand there's always risks and then act accordingly.
And on the point of the proof of reserves and being able to rig the numbers, like that's literally what FTX did, by the way, is they had the CTO guy who built a backdoor, so then the auditors, whenever they looked at it, the numbers were different. And essentially what matters is if the database of the exchange, which has the ones and zeros of the accounts that people have, well, hey, let's make sure that it doesn't have someone just puts in $1 billion there tomorrow, and cool, now they have $1 billion in their account, and they can, as we saw with
Correct.
FTX, just completely not have any stop losses or anything like that. Or so. Yes, I would agree with that absolutely. So what's your thoughts on sort of other ways to provide trust and transparency to users? Like, I know exchanges have in the past flirted with like insurance and that sort of thing. I don't know, what's been your conversations with insurers? Are they willing to talk to an exchange? Or my understanding is not really, or maybe they're not quite there yet. What's your take? Is that even a thing we should care about?
No, it is. And so to be very clear, right now, we do not have insurance. We are always trying to talk to the insurance companies to get insurance.
Which everyone's the same, by the way. Nobody has insurance, yeah.
Well, there are some of the largest, like I think Coinbase has like some type of insurance scheme for some of its wallets in the hot wallets, but not for everything, for sure. And they take a first loss themselves, etc.
Yeah.
So we're looking at we're always engaging with insurance companies. The fact of the matter is right now, the premiums that they do go. So first of all, about 3-4 years ago, when we started engaging, we got a broker to go and ask a bunch of different insurance companies. And the response that came back from every single insurance company was decline to quote. So they didn't even give us a price. So we've proceeded from there, where now we at least get some prices, but then the prices are exorbitant that just don't make commercial sense. You can't actually run a business with those type of prices. And so that's where exchanges start saying, okay, well, don't insure the entire amount, insure this amount in a hot wallet. And by the way, if there is a breach, we'll take the first loss or whatever it may be, right? So we're hoping that as security gets better, as the knowledge gets better, as information gets better, statistics get better, that we'll see a little bit more reasonable quotes in this space, but we're not quite there yet.
Yeah, I think it's a knowledge gap as well. I think they decline to quote because they literally don't know how anything works, or don't have enough people internally that can actually have an informed answer on that. So I guess getting back to the exchange side, you mentioned a whole bunch of things that you guys are launching, perps, that sort of stuff. What are some of the products which are doing well, or you think have a lot of legs for the future? Like with perps, we saw, it's been quite a few years now that perps have been around. I think BitMEX pioneered the perpetual futures contract or something like that many years ago. But now I think it's become one of the key instruments that you see, a lot of exchanges doing. So is that something that's interesting to your customers? Are they looking to have derivatives contracts? And is that something that only the sophisticated institutional end are getting into, or just sort of average peeps as well are happy to go 100x long on a perp?
Yeah, so a few comments. So we're not a casino, so we don't offer like 100x and things of that nature. But to answer your question, so right now, what they come to us for, we're the largest Bitcoin Rand trading venue in the world. Binance is also in South Africa, but we're probably 10 to 20x their size as far as volume is concerned. So with the deepest liquidity, the highest volume of Bitcoin Rand and a bunch of other cryptocurrencies against the Rand. We're not satisfied with that because we want to take our product, which we really have a lot of faith and confidence in, to a much more global audience. So we recently launched spot margin trading, when you can get up to 5x leverage on spot markets, which is spot markets, just for the listeners, just means buying and selling the underlying cryptocurrency itself. And then a few weeks ago, we just launched perpetuals. So we've launched the first Bitcoin and USDT perpetuals paired against the Rand, the South African Rand. So we're very excited by that because, traders love volatility, right? And one of the things about the Rand is that it's volatile. One of the things about Bitcoin is that it's volatile. And so there's this dynamic that you put them together and there is a volatile pair to trade. But it also has its efficiencies and its helpfulness in actually hedging the spot market or hedging arbitrage trades, etc. So the way we look at things is that we want to put products and services out there as building blocks for our customers to be building on. We have about just over 500,000 retail customers right now, and we have about 1,000 corporate and institutional customers. The fact of the matter is the bulk of the trading on VALR and all the other international exchanges is coming from institutional traders. And so those institutional traders are getting onto the perpetual books and things of that nature. So by virtue of them being the largest traders on spot markets and international markets, and then also by virtue of the fact that perpetuals account for about 75% plus of crypto trading globally, this is where we want to start stepping into the international territory, offering our services against the Binances of the world, the Bybits of the world, etc. And we've also done it in a beautiful way in the sense that you can have a single pool of capital. From that single pool of capital that you have in a sub-account, because you can segregate your accounts, you can trade spot margin, perpetuals in a very seamless way. So you don't have to worry about moving your funds this to this account or that account. You can keep it all in one place, have one figure that you're keeping your eye on to understand what your risk is. And we do 5x on perpetuals as well. So as I said, we're not a casino. We're probably going to increase leverage over time, but the idea is to do it in a responsible fashion for the benefit of our customers and ourselves.
I love it. And you mentioned the international sort of expansion. How do you do that? Because I think a lot of exchanges from back in the day, it was kind of dependent on your fiat on and off ramps, right? But I guess what we saw Binance pioneer from 2017 onwards was, USDT being the base asset for everything. And then, hey, presto, you don't have to have the fiat on ramp anymore. That's, offshored to someone else. So if you are to reach sort of new markets, it's really sort of maybe there's a compliance, thing that you might have to jump through for different markets, but also it's pretty easy, right? Like anyone can log on to a website from anywhere in the world. So therefore, potentially your customers could be everywhere in the world. But as you said, there's lots of different localized, different exchanges all over the place. But is it still a game of fiat on and off ramps? Does that matter in 2023/2024 that we're almost in? Or is it, are there other ways like perps is maybe a globally appealing thing for everyone everywhere? But how do you think about this international growth?
Yeah, so fiat on and off ramps are still important. Right. And our goal and our mission is actually to be a bridge of finance between the traditional financial system and this new world of cryptocurrencies. So we have the ZAR on and off ramps, we have dollar on and off ramps that are really critical. To your point, Binance didn't have that for a long time. But I think obviously with the news with Binance recently, compliance is tremendously important. So we are very clear in what we do. We are very clear in communicating what we do with all of our partners, our banking partners, our regulatory partners, etc. We do not go anywhere where we're not welcome. And so that's one of the things that's been challenging with growth internationally, is because in many countries, we are not welcome. Cryptocurrency exchanges or businesses aren't welcome because of dictates by the central bank, for example, that says do not bank such companies.
Do you think that'll change? Like are they going to see the light some stage, or does it really just depend who's in charge and someone else gets a new tenure, or what's your thoughts there?
So let me take a big step back, because I think that's probably the most important thing to kind of set the scene in the context of my views of where the world is going, and then we can get into the international expansion. Crypto and Bitcoin isn't just a cute thing that, a few people around the world are very excited about, and that it's on a cool thing called the blockchain, etc. Like, if you take a step back and you look at the history of money in the world, it has changed so much. And so the one certain thing about money is that it changes. But if you look at what it's come from, which is we had, individual banks that used to issue their own notes, to, central banks now issuing the money of an economy. But central banks themselves, the oldest ones, are only a few hundred years old. And many people don't realize that the Federal Reserve of the United States, which is probably the most powerful financial institution in the world, is just over 100 years old. That's not even a blip in the grand scheme of history, right? And by the way, before this central bank, there were two central banks in the United States that people don't know about that lasted for about 20 years each before they were no longer in existence.
That was the continental dollar or something, wasn't it?
There was some of that. Yeah, there was some of that as well. But they had very short stints. I think it literally was 20 years each. So the reason I share that is that if you look at the grand scheme of things, the way the world is going, the way technology is moving, if I were to say to someone in the United States, would you prefer to have a New York currency and a California currency, and that every time you guys landed in San Francisco and New York, you had to go and pay someone 2% to change your California coins to your New York coins, and everybody say, thank God that's not the case, right? But that is the case at the international level. And I think our political institutions, our national identities, they're already changing. If you look at maps of the world, they change. And so we are indubitably moving towards a world that requires a global currency. Whether it's Bitcoin or something else, we can debate that. But I think the future of the United States dollar being the reserve currency of the world, those days are numbered for sure. If you look at history, there's no doubt about that. So the question is, when will the transition take place? What will that transition take place to? And I don't believe that we'll have national money or any national currency that's going to be the global reserve anymore, because we're moving beyond the nation state. And so when you look at crypto, I think this is a natural thing that's decentralized, that's available for the whole world to use, that's outside of the control of institutions that the world is losing trust in, by the way. And so I don't see any other alternative. I see there's a natural progression to that. There might be new cryptos that are created. I don't know. So the reason I share that is that when you go back to your question about do I see it changing, that we will be welcome, I think that jurisdictions will have no choice. But if they want to enter the world of international commerce and the international community, there will come a time where it may have been risky not to accept crypto players up until now, but it's becoming very risky not to accept them going forward, right? Like they have to be part of the system. So we're already seeing changes in regulatory regimes, in discourses, et cetera. So it's just a matter of time.
Do you think that there's countries that have nothing to lose? In which case, why not do it? I remember looking at a list. There's like 23 countries in the world which have a currency pegged to the US dollar. There's at least the same amount that are pegged to the euro, which the Central African franc and things like that are actually euro held in a Paris bank somewhere behind the scenes, and that services however many countries in West and Central Africa. So, but I guess countries like that are already dependent on something which is not their own sovereignty and currency, and they import inflation or lack thereof from elsewhere and monetary policy from elsewhere. They kind of have nothing to lose. And maybe that's what El Salvador was going for, was they were using US dollars before. Yeah. And they're like, hey, you know what? Like we could either go with our own fiat, and is anyone really going to care about, a local fiat for a country of however many million? It's not too much. Probably not. Or do we embark upon something much grander and go with maybe some sort of monetary unit like a Bitcoin that can be used across borders? So do you think that it's maybe on a country-by-country basis, and perhaps more will come to the conclusion that they got nothing to lose?
So it's interesting that you asked that. So in 2016, 17, I had the privilege to speak to one of the Federal Reserve governors. And I asked this lady, I said, and we were talking about central bank digital currency. So not crypto, but central bank digital currency. And I said to her, is the United States going to lead the way here? And her response to me was that there's too much to lose in the United States for us to be a kind of a pioneer in this space. So we're going to be looking at other countries that in effect have less to lose, and then we'll be a follower. And I think the same kind of logic goes for crypto in general, where we'll see jurisdictions, we're already seeing jurisdictions, particularly in like Singapore, Hong Kong, Mauritius, some parts of Europe, that are putting places or putting regulatory regimes in place, not like the Central African Republic and El Salvador actually made a Bitcoin legal tender, which is like at the next level. But I do think that we're going to start seeing countries that say, listen, we have a shot at actually becoming a much bigger player on the global scene. Why don't we start being a little bit more forward looking and seeing what we can encourage and kind of let flourish in our economies? So I definitely think that's going to be happening.
Yeah, I mean, who had sort of global headlines for El Salvador prior to the Bitcoin announcement? Not really that many. But after that, now they have a unique position in the world, doing something as a pioneer. It sounds like this is some of your motivations, Farzam. Would I be correct in that? Where we want to bring digital money and the freedom to transact to as many people in the world as possible. That's what we're all about here at The Next Billion as well. But what was your motivations for going down this path in the beginning?
100%. So I mentioned the Baha'i faith when we first started. This is probably, or not probably, is the animating impulse in my life. And the fundamental premise of the Baha'i faith is that of unity, the unity of the human race. And when I look at that, I think I'm one of the few privileged people in the world whose professional career and spiritual beliefs have really come together in a very beautiful way. And so what I'm trying to do is to say, how can we promote the well-being of society? I think many people, particularly in Africa and emerging markets, are at the mercy of a financial system that doesn't serve them well at all. They can't get bank accounts potentially, or when they can, it's exorbitant to send money across borders. In Africa, it's sometimes 10 to 20% of the value that you're sending is in the fee that you're paying to somebody. And so the thing that animates VALR is to say, how do we promote the best interests of the human race? How do we promote the ever advancing process of improving our financial system, right? So that's what we're trying to do. It's a lofty objective. We know we're not alone in it. But I think, and this is one of the things that, going back to trust, it's really important, I think. We obviously need to make money as an exchange. We need to be financially viable. We need to pay our salaries, etc. But it's really important that whenever you're dealing with companies, you understand what's their motivating background. And what we're really trying to do is to serve people as best as we can. We might make mistakes, sure, but that is our goal, to promote the best interests of humanity.
Very good. And I think a lot of people would absolutely agree with that. And I deal a lot with the Web3 ecosystem, obviously, and I guess there it's the same as what we're all trying to do, right? It's like we want to build useful products for everyone everywhere in the world, without arbitrary random barriers, often because of what patch of dirt you might be standing on or what side of a border on a map might completely dictate your financial future or everything to do with your life, really. So yeah, I think when you said there's a lot of people that think the same, there absolutely is. I mean, a lot of us are in the same boat. I guess, what would you say to other firms in the crypto world that want to work with you guys? How do you think would be the way, whether it's a Web3 company or existing, centralized entities around the world, how would they be able to engage with someone like you guys?
Yeah, we're very big on partnerships. So we actually just recently got into a partnership with Visa, one of the obviously the largest payment network in the world. We have relationships with a bunch of the different crypto players. So we're always open to, promoting the system. So get in touch with us. Our main email is help@valor.com, which goes to our support desk, and they can kind of channel those things. My DMs are open on Twitter, Farzam Ehsani on Twitter. You can write to business@valor.com. So we're always looking to engage. And I think as the next step in our progress, which is kind of taking a step into the global arena and offering products and services that are of service to the global traders out there, we very much encourage and welcome those partnerships. And one thing I will say is there's been a false dichotomy as well within the kind of the crypto space, which is, we know everything, we're the best, banks are bad, you guys are losers, and we're going to take over the world. We don't view the world in that way. We say, listen, we're trying to promote the best interests of the human race. Banks have been there, they will continue to be there. They will all be in crypto at some point. We will work with whoever wants to work with us to promote the best interests of the human race, regardless of what you call yourself. So we have very healthy relationships with the banks. We have healthy relationships with the crypto communities, healthy relationships with the regulators. It's important to do this in a responsible fashion, particularly because of all the things that you just talked about, all the shenanigans that happened in our space of the past 1.5 years. And by the way, I think that they will continue. I think there will be some other surprises that we'll start seeing. Not to say that I have any information about them.
Always is.
There is. But now is the time of integrity, right? And I would really encourage everybody, make sure that we've gone through too much as a crypto industry. We need to have integrity, right? So make sure you're blowing the whistle on things that you don't see are working well. But we need to move this ecosystem in this world forward together.
And as you say, so whether it's Web3 or whether it's exchanges, there's ways that everyone can work together, because ultimately there is a path between now and a future where everyone's using crypto, right? I think we would all agree that at some stage, it makes total logical sense that we're using some sort of global state in order to track monetary movements that can't be interfered with by just random old people sitting around a table, once a quarter or something like that. Fundamentally, being able to trust that 1 + 1 is 2 is far better of a mechanism to run a global financial system than this guy said something. So I guess on that point, there's a window of opportunity that exists between now and that future, that these two things have to work together, whether it's banks and crypto, whether it's exchanges, whether it's NFT platforms, whatever it is. there's still this crossover. And we're not at that amazing utopia future yet, when we have access to this global finance. So there is this window, and that window is going to persist, right? And I guess from your perspective, it's all about how can you onboard people in as many jurisdictions on and off ramps so that then they can go and access other things if they want. Like you said before, withdrawing your own coins from the exchange. 100%. People should do that, in my opinion. An exchange is there. Cool. You can buy some crypto, withdraw it to your wallet. Like that's the very key use case that's important to everyone. But it needs to reach more currencies and be accessible to more people, right?
Yeah. So I'll say this. My personal kind of driving force and that of VALR isn't actually to promote crypto. We view crypto as a tool, but our aspiration is to promote the best interests of our brothers and sisters around the world. We believe that crypto is the tool to help us do that. But that's why I make the differentiation to say, like, we're not just crypto at all costs. Like, we don't care what you say and we're going to bash you down if you say no. Crypto has its downsides as well that we have to acknowledge and we have to work to improve and we have to work with. Right. And so that's why I say we will work with anybody, but it needs to be fair-minded. It needs to be with the right intention. It needs to be with the idea of service to people. And I'm one of the first people that will say, particularly in Africa, crypto right now is not for everybody. Right. Like if you are saving and you're living kind of, from hand to mouth and you're saving a little bit of money in fiat for the payment or the rental that you need to pay or the school fees you need to pay next week, that's in fiat as well. Don't be putting your money in crypto before you have to make that payment next week or next month, because who knows what the price, there's still a lot of volatility. So I think we need to acknowledge that. We can just say there's a lot of work for us in the crypto space to do, to build an environment, build the infrastructure, build all the rails that are required. And then there's also a whole cultural element that needs to come on board, which is it needs to have the buy-in of the people. Once we have all of these things come in, we'll start to see volatility start to decrease. We'll start to see more of just, rather than just, store of value, we'll start to see more of a means of an exchange. And ultimately, you'll start to see the unit of account, which is where we start pricing things in new currencies, right? But there's a whole evolution, and I think it's important to stay humble, right? Let's all acknowledge that there's a lot we don't understand. We need to stay humble and do our very best to help promote that progress that I was talking about. But we can't do that when we're trying to bash people down or say, you're an old fart, you don't know what you're talking about. It's like, let's bring them on board. Let's learn from them. There's always something to be learned from people.
I love it. And so we're coming towards the end of the year. I always end with this, but what do you see the future, particularly for you guys, I guess, in, say, the next 12 months? Is there anything particular that you're trying to get across the line?
I'll change your question to the next few years, if I may.
Sure.
And I think the crypto landscape in the next 5 years will be as different as it was 5 years ago. And about 5 years ago, Bittrex was the largest exchange in the world. And they recently just closed down. They just wound down. Binance is obviously the largest exchange in the world right now. And I think that will change in the next 5 years as well. And so for VALR, we're trying to put ourselves out into the global sphere to say, we really have a product that we believe serves people very well. We've got an amazing API. We've got lots of people that give us compliments about being on par with or better than the best exchanges that they work with in the world. And so our aspiration is to keep building. We think that there will be a resurgence in the next year, as we've already kind of seen, but that the volatility will increase. But more and more people will start understanding not just more about crypto, but they'll start understanding the deficiencies of our current financial system. And that understanding of the deficiencies of the current financial system, I think, will bring more people into crypto. So it's not about promoting crypto. It's about educating people about our current financial system and letting them, kind of connect the dots together to getting them into, that's all it is. That's really all it is. So we're very excited about the future. We're going to do our very best to be one of the large global players. Whether we achieve that or not, we don't know. That's definitely our aspiration.
That is a very good point, though, that in the exchange landscape, there's exchanges that have popped up and become huge, or there's exchanges that were huge and have gone to zero or, disappeared and that sort of thing. So I guess building like where you guys are positioned as number one in South Africa and expanding to new markets as well. Look, I mean, Africa is growing at some insane GDP, 7-8%, something like that. That's going to continue to happen. The entire continent, has a lot going on. So being well positioned to be able to be there as crypto grows, I think is going to be very good. So I guess wrapping up, where should people go to find out more about VALR, blogs, websites, Twitter, all these sorts of things?
Yeah, so valor.com is the website, and then literally VALR, VALRDOTCOM is our handles on Twitter and other places. You can find me at Farzam Ehsani, my first and last name on Twitter. I mostly spend some time there. And then help@valor.com. Write to us if you have any questions. Sign up at valor.com. We'd love to serve anybody that's listening and kind of grow the ecosystem together.
Absolutely. Love to hear it. We'll put the links down below in the podcast or up high or somewhere where the editors will put it. But we'll put the links there to check you guys out. It's really important that exchanges are the fundamental building block of all of crypto, right? So, it's necessary to get that right. And particularly, I'm most interested in emerging and growing in what I would say ascending markets where you've just got huge potential. And to be able to talk to someone like you guys that are doing really good stuff on the ground, it's great to hear. But thank you so much for your time today, Farzam, and have a great rest of the day.
Really appreciate it. Take care. Bye-bye.
Cheers. Bye.